Morning, guys. This one's going to be in the short-term channel. I'll probably go into a little bit more depth at some point in the main channel with the education kind of around this kind of fully. But in essence, I just wanted to highlight something that I see. And I actually had a friend reach out last night and we got kind of chatting, and he's actually working with another trader. I suppose it's just how these things kind of fit together. So I just wanted to highlight, I suppose the logic behind some of these moves, right? So although you're looking at the short-term stuff, the techniques and the strategies can be utilized and used on any time frame. Okay, but if you have that bigger bias, it's going to make it so much easier to understand why you're looking to go long or short. Okay, so for me, knowing where we were, back January last year, and saying to myself, okay, well, this is going to come on up. We had fib extension levels that we were seeing, and hence why I posted what I posted, that we kind of kicked the channel off on. Okay, so I was just seeing a lot of retail traders, even at this point, saying, we're off to the moon. This is going to be $1 million, and that was back last year. What have we done? We've done practically sideways, right? Now, on a much bigger time frame, and I'll come back into this, right? But on a much bigger time frame, you'll see this move happen on a monthly, massive time frame in comparison, right? But what tends to happen is the price comes up, making newer high and newer lows, higher highs and higher lows, right? So we got this move coming up like this, right? And then all of a sudden we get the first real break of structure, right? So in essence, what we're seeing is the first moves that we have a move there, right? The first high or the last high prior to the high. And we have ultimately the previous swing low, right? So you've got this kind of channel, right? Now, that channel is going to be tested later on, right? In these time frames, bigger time frames. And therefore, it's something quite significant. Now, what you can do then is you can start looking for the buy before you sells and the sell before you buys and so on. And if I zoom in on this, we'll actually see that we've got one sitting in and around there, right? That was the last candle, which in essence is indecision, right? It's indecision there because the price tried to go up, the price tried to go down, and ultimately kind of failed before a big major drop. Okay, so what you then have is after the price drops, the price has come down, but not really come back up yet, right? So in essence, we've left this open. There's basically money sitting up and above here, right? And that's basically what these two movements do, right? Now, the only difference being is that because this is a much bigger scale and it's Bitcoin, we had the eyes of the world watching this, which means we were very likely to get the fake outs, right? But in essence, what we've done, we've kind of tagged this level, right? Kind of gone and consolidated, right? Faked out and dropped, right? So you can see from a much bigger time frame that all it's doing is looking for liquidity in both sides, right? Up and down, right? We get rid of some of these. So in essence, why I wanted to do this video this morning was after this conversation I had last night, was we can clearly see the zones and the levels that we show will be valuable at later points in time, right? Now, this also works, supply and demand. This also works on a much bigger time frame, and you're looking for mitigations of these kinds of levels, right? Some people will refer to these as order blocks. You've got the buy before you sells, you've got imbalances, but ultimately all you're looking at, right, is the liquidity pools, right? So you've probably heard me talk about auction areas, and the auction areas are where you've got buys and sells going on, and it's basically a point of interest, right? People know that they could have bought and sold previously at these levels, and therefore the prices are likely to come back to these levels to kind of test the waters all over again, right? So if I stick these consolidation clusters on, right, what you can see is, again, a heavy area, which we've already identified based off the candle, right? We've got smaller clusters starting to form there, but based off smaller clusters over here, right? So the prices are being checked. So when we actually drop in, we've got a redistribution, price back down, there's another redistribution, right? And then back down, right? And probably in the large scale, we're now in some kind of bigger accumulation phase that will allow us to go up for a B, right? And in essence, you've got two, two options, or more than two options, but you've got two options quite clear here that you can obviously take potential B. And I've said this for a while, 50,000 look, right? It's going to be massive in terms of psychological levels for this, right? So in essence, what we're likely to see now on the bigger time frame is, what I'm seeing is the A up then for the B, right? But I don't think the A is quite complete just yet. And the reason for that is that there's actually liquidity in and around this level, right? Which means in theory, we could even go underneath these levels there, right? If we take the low there. So we've got logic as to say there's money sitting underneath these key levels. If you're following things like the Kingfisher chart, all that's doing is putting some of this information into more of a visual form, right, as a whole. But the more you understand this, the quicker it is for you to spot these things without the chart, right? You can turn these levels off and we can say, well, why would we come down here? Why would we go back up there, right? And at the moment, we sat in this little range. So if we now zoom in on a smaller time frame, I'll start off by saying, look, you got equal highs, right? And we got relatively equal lows sitting in and around there, right? So at the moment, we got this little range. Okay. So if I zoom in now down to a 4-hour time frame, and we got this little range that we play in, right? You've got to start asking yourself the question, what's the logic to go to either the upside or the downside, right? So when you're building the kind of case, if we've got potentially a not in, right, and potentially a B level, what are we actually achieving by going sideways, right? And at the moment, it's frustration for retail. It's the ability to sell off and accumulate for the bigger players, right? And you have to realize that that's going to be for the much, much bigger time frame. And therefore, when we see these moves, we can zoom in further again to get a smaller term bias as to why we go in where we're going, right? So when I say that, I mean, looking at these levels like this, right? If you come on down closer again, you'll see the liquidity that are in these moves. When we come on down, we go out, we fake out, and we start to move up. We retest and we go. Okay, in this instance, we've retested and we've gone again, right? But we've only come to the next level. But at the moment, we haven't really had a fake out in this level to the upside, right? Now, there's expectation for the B for many people. And there's also expectation of 300K if you're listening to someone like Carl. So ultimately, the problem being is that how, as an institutional trader, would you start to see this as a move, right? How would you identify this as a move? Why are we likely to go up rather than down? Well, the first thing is this manipulation. And it's actually, the logic is sitting there to say, well, we've collected the last lot of liquidity there. We've come back, we didn't quite retest, and we've gone straight to the next one, but we haven't really penetrated that, right? So there's logic for that to come on up and penetrate this, right? Taking us to this kind of level before ultimately coming back down and ideally through, right? So once you start to understand where the money is sitting, and this is a post I've just done on TradingView as well. It was quite an interesting conversation last night. And what I wanted to highlight is that regardless of the time frame, you can now zoom in, and we can see this now. Let's go down to the 1-hour time frame, right? And this is definitely not like me. So in essence, what we're seeing now, right, is a similar situation where we've actually had these kinds of moves. Let's put this on let's put one of these little trend lines where we've actually had these moves, right, where we create these little micro channels, right? Something like this. We're creating these little micro channels, right? Something like this. Then we get the breakout and in essence, the fake out, right? And then we go in the opposite direction, right? Now, if we do the same thing again, and we're just going to keep kind of repeating this until we get to the current time frame, we're going to see this now level there. And we're going to see this level sitting, well, there's two there, right? There's one there, and there's actually a smaller one down in there. And you see these little double bottoms forming, right? Over and over and over and over again, right? So you can see now, if we've gone into a 15-minute time frame, right? And you can see that we've still got this channel in terms of the breakout, right? So the reason that we don't need to understand the bigger time frame from this position, other than the bias, is that if we get a break above this level, you've got an upside target to take it to. If we come below this level, we've got a smaller downside target initially, but we've also got the bias for A, right? So you can start to take very good risk reward trades based on having the understanding as to where we are, but also knowing the probability on the bigger time frame. Okay, so you can then zoom in and zoom in and zoom in, and we can start to look for the various candle patterns, which is what I'm going to leave for the education in the main channels. But in essence, you can start to get a feel for what are we doing in this small time frame, and what are we likely to do when we break some of these key levels. All right, and therefore you can zoom in further again and come into a 5 minute, come into a 1 minute, whatever suits you. But ultimately, you can see how these things fit together, right? You've got the larger bias, we've got the overall trend direction, we've got key levels sitting at these buy before you sells and sell before you buys. We've actually got things like imbalances and so on, being filled and gaps being filled. And therefore, once we understand where we are in the big picture, I'm looking at this saying, well, if I was trading this on a minute time frame or a 5 minute time frame, any break above this for me now would give me an opportunity for a long, right? And as soon as I could, I'd be looking to move my stop loss here and then do something like this, right? Now, the same applies. If we break below this level, I'd probably say, I'll maybe wait for this one, wait for the pullback, take the short. But as soon as I can, I'd be moving my stop loss to this level with this as a potential entry, okay? So you can see how you can utilize it on any time frame. So I'm going to, like I said, post this into the short-term channel, just a quick video, and I hope you enjoy the rest of the weekend. Cheers, guys.